Could this be the moment we've been waiting for? I truly believe that 2025 is our window of opportunity. Let me break down what's happening and forecast ahead. This could be the opportunity we've been waiting for. A forecast for 2025, I'm going to share the data points that I've used over the last 10 years that's taken me from minus 33 grand to over 100 properties in my portfolio and show you how you can do the same too. Let's jump straight in. 12 months ago, the market was, let's say, wobbling. High interest rates, slow sales, doom and gloom in the media, and I get it, people got nervous. This happens quite a lot, right? Because fear sells. But here's the good news. The forecast is looking brighter, and I want to share with you what's happening and how it's impacting. If you know what to look for, this could actually be one of the best times since 2008 to invest in property. So grab a brew, settle in, and let's break it down. So what's happening? Number one, prices have stabilized. Now, there's been a lot of ups and downs post-COVID, and honestly, it seems every single year something is happening to throw everything out. Now, the thing with uncertainty is, number one, it creates great opportunity, which is pretty cool, but also uncertainty in the market means a lot of people that would be investing are no longer investing. And so what this means is growth fluctuates. Have we had growth over the last few years? Yes, but it hasn't been consistent, and most importantly with property, it hasn't been as predictable. But now things have settled down a little bit. We've got used to the inflation, we've got used to the new costs, we've got used to the new normal, if we ever could, post-COVID, and that's given us all a lot more confidence that we're moving forward with right now, which is positive news. Number two, the analysis is stabilizing. We're getting a lot more reasonable predictions from the likes of Savills, Zoopla, Rightmove. We are predicting strong and steady growth through 2025 and 2026. And we're talking like solid 4% returns here in many regions, and in our regions we're actually getting 6% plus, by the way. But something that's really interesting is that what was happening before in the Savills predictions versus Zoopla versus Rightmove versus Halifax versus all of the others is they were so wildly different, and that's because the economic understanding was there is no understanding, and so everyone was really confused, doing their best to make these predictions, but honestly it was kind of finger in the air, let's see what's what. Whereas all of the experts, if you like, seem to have very similar, consistent views. And again, that just tells us how secure the market is and the confidence in the market. And more importantly, we all agree on the data that's presented that we can take the action on. Number three, interest rates. Interest rates have, number one, they've dropped a little bit and they've been slowly coming down, which, by the way, if you go back to the start of 2024, was my prediction through 2024 and going through 2025, and it peaked in 2023. Now, they're already hinting, this is the Bank of England, at possible rate cuts this year, which means cheaper borrowing. And I just want to sort of delve into that a little bit and talk about what's going on in the economy. So you might not think it's too relevant, but over in America right now, Trump has put tariffs on, well, a lot of the world, then just China. And you think, well, what's the big deal with that? Well, it creates economic uncertainty. And what a government does, or the Bank of England in this case, is they prepare for what they could come. And it's not the fact that he's done anything, it's the fact that he changes his mind every 5 minutes, if I'm completely honest. And that's not a political opinion on it, it's just how people react to it. And so how does the Bank of England react to that? Well, typically they'll drop the Bank of England rates, and by the time you're even watching this, it may have even come down even further. Why does that actually matter though? Well, most of the UK and most of the Western world, it functions on debt. We have huge debts around the world, which is good for the country when the interest rates go down because debt gets cheaper. But for us, in investments, in property, we're utilising mortgages. And so every 0.25% that the Bank of England drops, it actually drops our monthly payments as well. The problem for us, or not really a problem, something to be aware of, is it's cheaper for everyone. And it's just cheaper for the average individual to invest in property than more people do it. Think about how many people stopped buying because they were like, I can't afford the monthly payments. Now they can afford the monthly payments, and you might not know this about pricing psychology, but when people are buying a house, they don't really think about, oh, I can easily afford 200, but I could afford 250. What they do is, the absolute max I can do is afford 250. And then they look at properties at 250. It's just buying psychology. So what it will do is it will push up prices over the next 24 months. So it's a very, very narrow window of opportunity where we need to take action in the first 6 months of this video being released. Number 4 is rental demand. It's strong. It's honestly, I was talking to a friend of mine. We both invest very heavily. We're both adding around 10 million to our portfolio in 2025. And we were talking about what's going to happen to rents. And honestly, he just said, I cannot see where it's going to stop. It's just going to keep on going. Now, this isn't in every area of UK, but if you look at places like Manchester, Leeds, Birmingham, and this is where I invest in West and South Yorkshire, the demand outstrips the supply across most of the UK, but especially in the areas that we invest in, which is perfect if you're planning to become a landlord or expand your rental portfolio. In plain English, we've got around 6 months where the market is consistent and it's solid and has the opportunity to explode. And what makes this really exciting is, worst case is you can be taking action right now in a relatively stable market, and if that long may it continue. Realistic case is you get in now, wait for it to explode, and your net wealth rapidly increases. And we've made this bet several times over the last decade, and it's allowed us to build up a portfolio of over 100 properties. So this is not my first rodeo, and I will be going all in. So let me paint you a bit of a picture here. Let's say it's early 2025 and you've managed to save up 50k. Now you might be from London going, you can't buy anything for 50 grand. Well, I'm not talking about 50 grand houses. I'm talking about a 50k deposit. So you do a bit of research. You find a 2-bed terrace house just outside of Sheffield, let's say. Solid area, good commuter links, decent schools, strong rental demand. And again, you can see what's going on in Sheffield and Yorkshire right now. It is amazing. Property's on for 155 grand, and we go, do you know what? Let's make this happen. So we use our 50 grand and we use it for the deposit, buying costs, stamp duty, any fees. You get the mortgage through LENDLORD. And by the way, strongly recommend checking out LENDLORD, completely free. I'm just not going to say too much about it right now, but I'll put a link in the description. Check it out. The best software you'll ever use in property, guaranteed. So we use LENDLORD, we put it on there, and we managed to rent it out for 950 a month. The mortgage and everything else is coming in are around 600, 650. And after everything, we are clearing a couple of £100 in positive cash flow every single month. And this is really exciting because when we're owning property, the one thing that I'm looking for from a rental point of view is I want to be covering costs and hopefully get a drink out of it. This isn't about to allow me to quit my job, right? I'm not going to quit my job on a couple of £100, but if I can buy one property, have 50 grand all in, and I'm getting net cash flow of say 3 grand a year, that's a really solid return on my investment, right? But here's where it really gets exciting. Tax-free money. Yes, tax-free. This is the capital growth. So let's be reasonable here, and let's say over the next couple of years, we get 5% growth each year. That's going to compound year on year, of course, but let's say that's 10%, just to keep the numbers easy, over that 2-year period. That's 10% of the £155,000 purchase price. That's 15,500 over 2 years, plus the 2 years of 3 grand, another £6,000. That's 21,500 in 2 years from a £50,000 investment. You've got built up equity, rents have gone up. Now you've got 2 years of reliable income where a tenant's moved in and made your house their home. And at that point, you've got options. You decided to put a 2-year fixed mortgage through LENDLORD on, and now LENDLORD, because the rates have gone down even further, which is not financial advice, but very much a prediction of mine, it's gone down 2 years. You decide, actually, I might refinance. Maybe you'll leave it and put it on a 5-year, by the way, which I do a variety. I do about 80% of mine on 5-year, the rest on 2 years. And what I do is I refinance. And guess what I do with the money that comes out? This may shock you, is I use it to buy more property. It's weird now, going for 10 years of buying every single year, is almost every single month now we're refinancing a property and just adding it to the pot. And that, my friend, is how you quietly build a property empire. It's so weird now how going for 10 years, just doing this in the background, suddenly scaled to over 100 properties in our portfolio. And people are like, you become an overnight success. Where did this come from? It's like, no, you're seeing the outcome after 10 years, not the input. So, sounds cool. But how do we actually take advantage of this right now? Well, here's my simple 4-step plan. No fluff, no nonsense. Number one, now your strategy. Ask yourself this, are you going for long-term capital growth or do you need strong cash flow from day one? This is really going to impact the type of strategy that you're going to go for. For me, I like boring, vanilla buy-to-let properties. Number two, pick the right area. I'm going to say this very clearly. You pay cheap, you pay twice. Do not pick a shit area. Buy a great area where actually you think these should be worth more than this. So I'm focusing on fundamentals. So I'm going to look at logistics, hospitals, the roads around there, what's the local schools like, investments, universities, what's the government saying about it? Is it in a business zone? I love Yorkshire. I love Yorkshire. I'm obsessed with it. They call it God's country for a reason, I am sure. But really, I like the numbers. I like the money. I run the numbers properly. And I want to really understand where is a location I see scaling the most over the next decade in the UK. You don't need to agree with me, but I've assessed Manchester, Nottingham, Liverpool, North East, Leeds, and so much more. And West and South Yorkshire, they look best to me. Number three, run the numbers properly. This isn't a game of Monopoly, as much as I would love that to really be the case. I don't have my top hat and monocle for this video, but you do need to factor in mortgages, rates, insurance, maintenance, voids, everything. And if the numbers don't stack, walk away. Do not put this down to guesswork. Obviously, if you've got a huge spreadsheet breaking down everything already, that's great. If not, LENDLORD. I genuinely use it for absolutely everything. I use it for bridging, analysing my rentals, my portfolio. It reminds me if I've been paid or not by the tenant. It reminds me when I'm coming up for a refinance. Everything in one place. And it's free. I actually know the owner, Avi, really cool guy. And I keep telling him, just put the bloody prices together. Put the bloody price up. But for some reason, he wants to do this for free, wants to add a load of value, which I know will not be the case all the time, but take advantage. The link is down there. Click on it. I promise you it'll be an absolute game changer. Let me know. None of this makes sense, though. None of this does anything for you if you don't do step number 4. Take action. Okay? Start small if you have to. You know, you don't need to go, right, I'm really excited about buy-to-let, so I'm going to buy 10 this year. It's like, no, it doesn't work like that. You don't need to start with 5. You don't need to start with 10. Start with 1 or 2. Get it right, then scale. And the key is consistency, not speed. The whole story of the hare and the tortoise here, you know, really comes to mind that you learned as a kid. And this is not about rushing. Nothing about property is getting rich quick. It's getting rich for sure. And you need to make sure we're doing it in the right way. So before we wrap up, if you're managing multiple properties, planning to scale, or even buying your first buy-to-let, you need to utilize the right software. Today's video sponsor is, you guessed it, LENDLORD. And if you've been watching this channel for a while, and as I've built this over 100, closer to 200 property portfolio, I don't just mention any software. I've never spoken about anything that I've not used personally. And this single piece of software that's had the biggest impact on me is LENDLORD. It's a free platform built specifically for UK landlords and property investors just like you. And you can track your entire portfolio, analyze deals before you buy, and manage your finances all in one place. If I'm honest, just check it out. I don't need to sell it. It costs you nothing to check it out at all. You could create a profile using the link below, absolutely free. I am telling you, it will be the single most valuable resource that you've ever used in your life. Check it out, come back and leave a comment so other people know what to do. The UK property market is exciting. It's been a long time since I've seen these opportunities that are available. Prices are really steady right now. They're consistent. Rents are up. Borrowing is starting to get cheaper. And the reality is, if you've been waiting and sat on the fence, which I used to do, by the way, 11 years ago, probably about a year and a half, I was sat on the fence waiting for the perfect time. Well, you don't wait to buy property, you buy property and wait. And now's the time to get the education, get your plan into place, and take your first step. As always, I want to say a massive thank you for watching. I hope you got value from this video. Let me know what you think of LENDLORD. Hit me with a like if you did get value. Hit subscribe and the notification bell, and I'll see you in the next video.